What's good, everyone? We're going to keep it short and simple like we always do, and we're going to be doing another Forex tips video. This time it's going to be on the trend. So what types of ways does a market move, how to identify this, and how to sort of incorporate it in your own strategy to find your own edge. So let's get straight into this. There's three ways a market will move. Firstly, you have a bullish trend, right? Some people call it swing high, swing low. So it looks kind of like this, right? We've got uptrend, you can clearly see that. Now you have a downtrend where you have something like this. You got a lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So bullish trend, bearish trend, and there's one last thing. Tell me if you know it. It is consolidation. So when you haven't really got a trend going, you're just kind of consolidating in the market. If you want to find a strategy that's a trend-based strategy, these are the two you want to sort of pay attention to and try and find in the market. You want to stay out of the consolidation ones. The only way you can really trade consolidation sort of trends is when you are having a sort of scalping strategy and you're trying to catch these range bounces between the highs and the lows, which is a bit more difficult and it can never really be predicted enough. So my suggestion is, especially if you are a beginner trader, is to focus on the trend moves, because that's how you get an edge, right? If you can just find the trend and go with it and plan when to execute going with the trend, that will give you enough of an edge. And then over the large numbers, as we always talk about, the law of large numbers will play out and you'll be profitable in the end if you just stick to a mechanical system. So it's all good saying bearish trend, bullish trend, but how do you identify it in the market? Everyone likes to draw these things, but it's hard to actually identify in the market as a beginner. This is what we're going to be showing you now. And what you do is, so we've got the gold chart here, right? We've got the gold chart here. And remember what we said. Higher highs and higher lows, swing highs and swing lows, however you want to call it. We can identify here, firstly, this is what will help you. Identify a low. Now we can identify a high, identify a low, high, low. You know, this is how the gist goes, high, low. And now we've got the trend, right? If we connect the dots, what's going to happen? We connect these dots, connect this dot, connect that dot, connect that dot, connect that dot. It's looking exactly like our drawing earlier where we were just doing this, right? With the higher highs and higher lows. So as you can see, it's real. That is literally how the market moves. Any market, any sort of pair, you will find bullish trends, bearish trends, and consolidation patterns, right? So in this section now, how can I use it to find positions? Let's actually be a bit more analytical and let's look at what happens every time, right? So you got the low, you got the high, you got the low, you got the high, for example, low and a high. But now let's look at where can we get a position in this thing? Yeah, it's all good saying, yeah, it's a bullish trend, but where can we get a position here? So what you can notice is we make a low, we make a high, right? With the resistance. Time you see this pattern form where it's like a bearish candle in a bullish trend, and then you finally get the bullish momentum come back on as a support. Look what happens after. Look what happens. You have support formed, you pushed up. You have support formed here, you pushed up. You have a support formed here, you pushed up. Every time you broke these highs after making a support formed, you pushed up, and that continued the trend. So that is a way to get a position where you've marked out the higher highs and you marked out the higher lows, yeah, and then you look at when the support's formed and then enter when we break the high, because we're looking to make a new high, right? So here you can see we broke the high, a support formed, we broke the high again, and we just shot up. And you could have maybe your position like this where you've got the stops on the low, because if we break the low, we're changing the range, right? We're changing the structure, and we won't maybe be bullish anymore. And here we go. You can like obviously maybe target these highs on the left as resistance or anything like that. Whatever you may do, I'm leaving it up to you guys, but I'm trying to teach you how to find a trend, right? So you can see here again, we had a low. We had a low here. We broke up. We had a high. We made a support. We broke the high. And guess what happened again? We pushed up again. And this is really literally how the market moves. It's all based on like market structure and psychology, because think about it. If you're bouncing between the floor and the ceiling, once you break the ceiling, you're going to continue going up, because you're going to go find the next ceiling, and the next ceiling is when you make the next high, and then you're going to go make another support where you're going to find the next floor and you're going to break it again if you're in a bullish trend. Or if you're in a bearish trend, the opposite thing will happen, right? So you can see right here, every time the opposite happens. So you got a high. So you got a high and a low, and you made a resistance and you broke the low and you came down. Then you made a low, high, you made a resistance, broke the low, came down, right? So it might take a while for you to get used to this in the beginning, but so a bit of homework for you guys to help it sort of click in your brain. Go and draw swing highs and swing lows, right? Draw a bullish swing high, swing low trend, draw a bearish swing high, swing low trend, and draw consolidation. Now, go on the chart, pick any chart, maybe 1 hour time frame, and go and maybe use zoom annotations or use your chart annotation to spot out highs and lows, and spot out what happens when we make a resistance and break the low on the bearish trend, and we make a support and break the high when we're in a bullish trend, right? It will slowly click into your brain, and when you're on the chart on the week, you'll be able to see, okay, maybe I should look for more sells today, because then I'm going with the trend, which gives me a higher probability of the edge playing out in my favor. Once you're going against the trend, things start to get very tricky, and going against the trend means you need some extra confirmations, which obviously, depending on your strategy, whether it could be certain indicators, certain structure points breaking, things like that, right? Which makes it much more difficult. So as a beginner, I would 100% recommend try trading with the trend, and if you want to find your own edge, just be a bit more analytical, do a bit of homework, do a bit of back testing, find when you can spot a trend playing out, and then spot if you can find those resistances and then the breaks of the structure. It's basically called a break of structure when you break the point, the lowest point, right? So just break the structure of this. Now you go high and you go low, and then when this breaks, that's a break of structure, because you're coming to the downside. Go back test this, follow me on Insta and Twitter, let me know how you guys are sort of finding things, and I'll be happy to obviously get back to a lot of you guys, and I'll see you guys in the next video.